Hello. Hello. Today, well, I guess Justin with Deep Dive Stocks here. And today we're going to be doing another after hours market dive. But this time we're gonna take our time a little bit. We still have like a 5 minute goal, maybe 10 minutes. And we're just gonna, instead of just kind of looking at the charts as they go and kind of just commentary, we're actually kind of gonna keep with it and watch as it progresses to kind of get a feel for how LDPM and LDPS are utilized in real life. So let's go ahead and get started. Today was a pretty exciting day. I think it was the big speeches at Jackson Hole, and so there are a lot of moves in the market. And so let's go ahead and watch that as it happens. So starting up, we have here SPX, and today is Friday the 22nd. So let's just start around here, the 21st, so yesterday. So we're going to be using the replay feature at 5 times. For LDPM, I have, for me, the default loadout, which is just the LDPM 5, 6, and 7. And then they are of 144, 377, and 610. For these, for the intraday charts, usually like 15 or 8 minutes is my go-to, but I'll just do 15 here since it's what's pretty familiar with most people. And so let's get started. So right off the bat, if we opened up TradingView and this was the first site we saw, we would have some pretty negative inclinations. The LDPMs, remember, they're like the resistances if they're above the price, and they're moving up, which is kind of a little bit of a bearish sign. Because if we think of the most bullish thing that could possibly happen is that the LDPMs would actually kind of do the opposite. They would move below spot, and then it would immediately start, being a little bit more reassuring that that is a support. But it looks like they're very keen on staying above spot and acting as resistances. We do have this was this bearish liquidity. It did get bullish for a second. It looks like we just tried to pass LDPM L5, this resistance here. It failed, was not a successful crossover, and then in one of the results is that now we have a bearish candle printing. So open up TradingView, we see this, and already we should know, the main gist is that things are bearish. We failed a bullish crossover, and so downside is the most likely. So if we continue, we see a little bit of lag. Oh no, it's because I had stopped it. Maybe 5 is too fast. So we were here. We tried once more to kind of move up to get a test. We failed. We get that bullish liquidity. We go up again. We do another failed test, but we kind of see that now we're printing some bullish prints. And the current candle, this guy, is bullish. So this tells us that we're likely going to test the next resistance, which we can see here at 639 or 63.79, which was Thursday at like 3 p.m. right before market close. So things are now be kind of, we're seeing that bullish liquidity start to enter into the candles. So we're getting flicks of green. And so now, yeah, look at that. So now we're going to test that next resistance. It looks like on Friday at market open, we jumped immediately over that LDPM and immediately tested that resistance, like what would be expected if we have bullish liquidity at LDPM L7. That bullish liquidity persisted even though the crossover was unsuccessful. But then we had another giant candle upwards with that bullish liquidity to overtake LDPM L7, and in this instance, also immediately meet that next resistance up at LDPM L6. From there, now we have this bullish liquidity. We are, it seems, riding that support. So we've crossed over LDPM L6, but now we are kind of like riding that for support. But still, I think if this were me, I'd be happy. We, go long. You've gone up both resistances, and so I would probably start like sizing out or even exiting my position if it were me personally. but we still have bullish, and we're testing that LDPM-L6 once more. And you can see what I mean, where like we had that bullish surge, but you really do want to see these like big candles upwards, right? And once you start getting a crossover where spot sort of starts languishing, or it really doesn't have that oomph behind it, and especially when it starts testing that support, it's still bullish, but it is one of those moments of is bullish liquidity kind of fading here, because if it didn't need the support at LDPML6 to maintain that bullish liquidity, it wouldn't be at the support. It wouldn't be resting there. So the outlook here is bullish, but we can see that we've already had quite a nice bullish stent. We are using this LDPM as support. And so I think the outlook is still default up again because LDPS is printing those bullish prints, but this time with maybe a little bit more caution that the bullish liquidity might start failing. And so we would kind of start looking for, as it tests those supports, you start looking for the opposite of what we saw down here, where we were testing those resistances and starting to get bullish liquidity, and then things went up. If we start testing these supports, and then if the next candle or two start flickering bearish, then we know that things are failing, like that support is kind of running out of juice, in other words. So the take home for this is bullish. I would probably size like not a full size into this, right? Because I really want to see how these next few candles interact with that support. If we bounce, if bullish bounces up, we get a nice big bounce, then maybe start sizing in. But if we start, supporting that LDPM, or demanding support from that LDPM L6, and bearish liquidity starts coming through, then definitely we would expect movement back down to LDPM L7 at 6,437 right now. If bearish liquidity continued, then we would, that would be LDPM L5 if everything stays on its current trajectory at like 6,432. So it looks like 6,400 is that, next support if bearish liquidity comes through. But overall, tentatively bullish. Um, there are some findings here that do, suggest that it is the testing of the supports that is going to be most likely. But we'll see. We're going to keep it light, airy, simple, straightforward, and see where that takes us. So bullish leaning. The only thing preventing like a full bullish outlook, like a full we're gonna just go, is simply this like kind of we that test, that needing to kind of move back to the LDPM L6 for that support. So if once that goes away, then it's a kind of like a full port bullish sort of thing. So that is SPX for today. Let's check out ES futures. And I guess we could do the same. Let's start with where am I? Here. I am here, as some say. And we're going to be starting at Thursday at 3:45, so right before market closed on Thursday. If we again opened up TradingView, this was what we saw right when we opened up. We would see this bearish liquidity, several attempts at crossing over those resistances that were unsuccessful. And so for now, the outlook would still be downwards as that bearish liquidity like sort of manifests, right? So let's hit play. And so now the outlook has changed. So now, and this is kind of like the important bit. I think one of the things with LDPM and LDPS that people sort of initially are not huge fans of, or they're not too familiar with, but it's the idea that data changes and can change very quickly. And so when you have a tool that is simply measuring what is occurring, sometimes things just change. And this isn't all that apparent, or like I think traditional metrics give an illusion of that. So like if you're using VWAP or the moving average, it looks like there's this interaction between the price and the actual indicator, but it's really kind of just an illusion, right? Like the indicator is really just following the price. But LDPM and LDPS simply don't work like that, because we can see that there were multiple instances of candles and spot being significantly higher than present, attempting to overtake these LDPM resistances, and yet they were unsuccessful, and LDPS maintained its bearish outlook despite these sort of spot bullish moves. And then here, liquidity conditions changed as we're trying to move through those resistances, and we start getting bullish liquidity. So now the immediate default isn't we're gonna, test these, LDPM supports. We're gonna fall back under it. But now that LDPS is printing bullish candles, the outlook is that we're actually gonna move up. We're gonna, froggy hop up to that next resistance. And in this case, we see it's at LDPML7 at 6407, which at the time of 7:30 on last night, Eastern Standard Time. So now we have bullish expectations. We do test that support, still testing that support. Oh, testing that support. But ultimately, so that would have been right nerve-wracking, a little bit of a nail biter there. Um, There are times when a particular candle through the actors involved, if there's a particularly, so if we actually go back to, can we see what was, so we had an eager bid that was flowing to the ask initially. So that means we had like the price is kind of being supported by this eager bid. And then what happens? And then we get, right. So if we go, so the eager bid disappears. It does what it needs to do, and that's the problem with the eager parties, and that's not really the topic of this conversation. But we can see here that there's this eager bid, and it's moving up to the ask. So we have this bid that's crossing the aisle, moving up to the ask to transact, and spot is still kind of going down. So that's not good. That eager bid disappears, right? And as soon as that eager bid disappears, there's a vacuum left between where the regular kind of organic value seeking bid was and where all of the space up where that eager bid was reaching up to transact. And the issue is, as soon as that eager party disappears, you're left with that vacuum space. And that's kind of what we're seeing here. Absolutely a nail biter if it was happening like in real time, if you were watching this. And so I personally have some systems with that. So I usually will downsize the position, but I don't exit it fully. I wait to the next few bars, especially if it looks like it was one of those eager liquidity vacuums. And I've done some posts about like that like vacuum mechanism with the eager and absent parties. I can do a video about it if you guys want. Just let me know in the comments. Otherwise, it's on the good old X/Twitter page. You got to go do some digging though, probably. But so we see the nail biter occurs. I'm gonna put my name on it and say that if we were to look under the hood, I think that that's exactly what we would see. We would see that this was sort of being supported by like this, eager bid that was maybe relatively thin. As soon as it disappeared, though, the counterparty that it was transacting with fell down all the way to that organic bid that was down there. And rebounced, and now we have bullish liquidity. Bit of a messy start, but we see here with this bullish liquidity resumed, we're going to test the resistances. So our first one we're testing here with LDPM L6 at 6,383. Continue past that with bullish liquidity, gives the LDPM L5 as the next point at 6,391, and then again, as we've seen. So let's see what happens. So we go up, let's do like three. Yeah, we do those nice big pushes right past those resistances. And that's like I said, that's kind of really what you want to see. Oh, there we go. And yep, so we bounced. Remember, like this is a good example of kind of what we're seeing here, excuse me, even with LDPML6, where we bounced a few times off that support, and it's not ideal, right? But as long as LDPS is telling us that the liquidity conditions are bullish, then the expected outcome is bounce, bounce, and then a nice little skyrocket up, right? As long as that liquidity condition, as long as LDPS maintains the bullish outlook, that is the default kind of outlook. And so we continue, and then all the good stuff happens. The market does a good day. We get this bullish move. And then now though we see we have this aggressive bid flowing to the bid. So we have this aggressive party that's reaching up to transact, but actually as far as it can reach up is just at the bid. So this is technically bullish, oh, but the it's draining a bit, right? So it's not uncommon in these situations to see the price need to bounce off of the nearest support. And then again, as long as the LDPS is maintaining a bullish outlook, we should expect it to boop, boop, like, like a pebble on water and then zoom off. If during this process of moving down to the support, things start looking bearish, the candles start turning red or pink, then our outlook actually becomes a unsuccessful support and then moving through that LDPM down to that next support, which here we see is both LDPM L7 and LDPM L6. So the takeaway for now, though, is tentatively bullish, uh, and keep an eye out for, don't be, it's one of those situations where you're, if I'm long in this position, but say, the price starts decaying, as long as LDPM still looks like it's headed towards being a support, and as long as the liquidity conditions remain bullish, I'm not going to be too phased. If as we start approaching this LDPM, we start getting that bearish liquidity coming through, now I'm like, maybe we entered, a little too late. Maybe we should have tried to catch that initial switch to bullish liquidity. And then, conversely, though, if it does start getting that bearish liquidity as that support is being reached, then maybe now it's time to switch to a more definitive sort of short position because we can see that the next supports are a little bit down, right? You can probably scalp some alpha out of that. So that's that. So we can see again, and I just kind of want to keep re-emphasizing that with LDPM and LDPS, the system is really, if LDPS is bullish, it's up. And the name of the game is to simply look at the resistances that might be above it and then figure out how LDPS is behaving as those resistances approach. And then conversely, if LDPS is bearish, where are the nearest supports and how is LDPS behaving as those supports come into view? So next up, we can see, what a great example, right? This is exactly what we were talking about with the ES futures that we don't want to see if we have that long position. So let's go, I guess, what, the 22nd? We've been starting, so we start on the 22nd, this is Bitcoin on the 15th. So we start on the 22nd, we're bullish, bullish. We test those support for a minute, bullish. Now we start getting those bearish candles start printing, so we know that bullish liquidity is draining. It's not as strong. Then we get that very clear move to a just several bearish candles back to back. So now we immediately know we have to shift gears. Now we're not looking at up anymore. We're looking at down, and the nearest supports, thankfully, are right here at the time at 112,000. I don't think that's how you say that. 112,000. And then it quickly moved below LDPM L6 and LDPM L7, caught the support at, or LDPM L6 and LDPM L5, caught the support at LDPM L7. But since LDPS is still printing bearish prints, our outlook is still down. And then that happens. That was actually really fast. Let's see if we can, this is at point 0.5. Let's see a little bit more like what would it look like in real life. So we're bearish and we're like, oh man, bearish, bearish, bearish. We're testing that support. And then, yeah, that's just actually kind of wild. That is, fun moment in the market. We have this really large, rapid switch to bullish liquidity. Does it say, can we figure out anorganic bid? So liquidity is moving up to the ask. And then we get, there it is, that aggressive bid walks in. So that aggressive bid is, so we have like the eager bids, which we saw earlier, which will rise to the ask in order to transact. Aggressive bids actually move past the ask and transact above the ask. And this gives incentive for the ask to immediately, uh, for them, slam on the gas to move their ask upwards so that they can sell for a higher price. And we can see here exactly that aggressive bid flowing to the ask. And that's just, you can't really predict when an aggressive ask is, or aggressive bid is going to enter the market. And that's kind of the double-edged sword of having that reactive data that is, actually has its pulse on how the data are flowing through the market, in this case, liquidity, because we can see the data very distinctly tell us what is happening, but it's, you're standing in the shadows until you're not. And so if you're just standing in the shadows, you can't really know. So we get this bullish liquidity. Our outlook is up. So go up, 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 up. And again, we do see so that price starts to stagnate a little bit. LDPM's coming up. And again, just like we saw with this is the exact same scenario unfolding, but on crypto. We had this admittedly large random bullish spike, but we see that the liquidity maintained its bullish stance. So that means the default outlook is up. We don't have any resistances above us. So really the only threat we have is if the price is going to decay down to a support. Maybe we don't want that because of our entry price, or maybe it's just, goes against our idea what a bullish stock does. And so we're a little mindful, but again, we know that the ideal is that LDPS will tell us when uh if the spot starts moving down, when it's going to actually be like a concerning situation if we have any long positions. And LDPS is going to do that by way of switching to a bearish print. It's going to start printing bearish liquidity, which is, as we said, what we are seeing now. So we see that so now that the prints and they're consecutive, so now that the prints are bearish, then the movement down to the support is very likely, and that's currently at 115,400, 500. And if bearish liquidity continues, then it will be movement down to the next support, which is currently at LDPM L6 at 113,600. And again, you just start playing that game. But this is the foreshadowing that we like to see from LDPS that's telling us, hey, all of the bullish liquidity was spent in getting this, right? This is the product of that bullish liquidity. And things have been flatlining, and now things are looking bearish. And so the cycle continues to the downside. And again, look at how pretty similar these two views are between the ES on the 15 and Bitcoin on the 15. It's just that Bitcoin is actually a little bit more ahead than the ES features, and likely because it's 24/7. But this begs the question of, is this the exact same behavior we're going to see when the futures markets open on Sunday? The answer is likely. Like we have that aggressive bid, so we're already moving above the ask, but price is stagnating, which means that there's not a lot of ask to be found, and things are already starting to meet the bid. So we're flowing down to transact at that eager bid. So that aggressive bid. And here we see we have an eager ask. So that's the opposite of what we saw over here, where now, as opposed to an eager and aggressive ask, we have this, or eager or aggressive bid, we have this eager ask, which is moving across the aisle to transact, which happens to be at the bid. So outlook for Bitcoin on the 15 is definitely, now that we have bearish prints, movement down to the support, and then so on and so forth, etc., as we see. And lastly, another interesting thing that I thought we might look at is VIX. I think I had noted, I think on one of the tweets I did on like the daily, that VIX was looking a little spicy and had a few bullish candles, I think like two. And we could see that that did nothing for us. So let's look at, I'm actually curious what happened. So let's see. So this is the 15, which is admittedly a different time frame, but we're just zoomed in a little bit. So we see, I'm gonna move it on 3. So we start out the today early with we switch from that bullish, and again, look, sorry, but this is the exact same thing. This is the exact same setup as this and as this. It's just tinier, but we can zoom it up, right? And so that's another thing I want to highlight with LDPM and LDPS. I think at first it seems very chaotic, very strange. The lines they don't behave like normal lines. But there's really only a few patterns that you really got to be able to like actively memorize. And that's this bullish liquidity push above resistances. Price starts flatlining. You need to be on the lookout for developing bearish liquidity, because it does mean that there's going to be a test of the next like support. In this case, we can see that actually it did test early already down at 8 p.m. on Thursday, bounced up real quick, but maintained its bearish outlook. So price spot is going up, but again, test another support, maintain bearish liquidity, fail the bullish crossover, fail the bullish crossover, test support, fall through. And that's just simply because that's what LDPS said what was going to happen. And so we are left with bearish liquidity, very much so, on VIX on the 15 with no actual support noted. But let's do our little trick and add the 987, which is the step up above 610 for me personally. You'll notice that the look backs, so these are just the fib numbers, and I usually do like every other just to kind of get like a broad spectrum view of what's happening. So like 13, skip one 34, skip one 55, skip one, you skip an 89, you get 144, so on and so forth. So 610, I don't like, well, 1597 is like super long term, so I do 987. But we can see actually we just moved right by, we zoomed right below 987. So actually, let's see if there is a 15. Sometimes you won't be able to get one. There's just not enough data. Let's make this. No, we already have that. Let's do a nice, cool purple guy. Is there? It's thinking. It's thinking. Aha. And we moved by that too. So we're actually on this view, there is no identifiable support for VIX because LDPM isn't programmed in TradingView to go above 1597. So just bearish all around, bearish on the VIX. Let's do the opposite then. Let's add actually some, just real quick while we're here, you can see kind of like what the process is for me as I go through this. Instead of the ultra long term, let's see if there's any eager parties stepping in. That's pretty bearish too. So we added these really low order of magnitude LDPMs. And the idea is that maybe we would see them coming below, acting just like the regular LDPMs. They're just a lot more reactive and supporting spot. But we actually see that they did do a little bit of a scoop, but now they're resting above spot. So even the very eager parties, the fresh current flow of liquidity is above current spot. So it's a resistance. So that's a pretty bearish look, which does compete a bit against the futures outlook, but I don't think it interferes much with the Bitcoin outlook, which does still seem to be new bearish prints. So let's expect probably like 116. And then just because this pattern is the same as we see on the futures, then we should probably expect that as well for the futures. And SPX is not quite as uniform as the futures and with VIX, and so the name of the game here, SPX is still bullish until proven otherwise, but definitely interested on market open to see how well this LDPM L6 support holds, as well as if any of the new candles that start printing on market open are bearish, in which case we can be reasonably assured that this is what is likely going to play out. And so that's all I have for you guys today. I hope this is helpful. Um, if you have anything else that you want to look at or see, let me know. Otherwise, yeah, I'm enjoying these videos. If this is the style or content that you enjoy and that you think is helpful and insightful, let me know. If you would like a little bit more pre-planned, where I have more of the older style videos where it's kind of like a slideshow of sorts or me talking with a script, let me know because I'm doing this for you. So I want you guys to see the benefit of LDPM, LDPS, and also to see how it's pretty straightforward. When it's green, expect up. When candles are red, expect down. So that's that. Actually, real quick before we leave, what is the higher orders? So here we had that bullish support, little mix, bounce up, kind of get snagged here, and now we're resting on that support. So on the 90-minute, it's looking, again, like it's bullish, but if, everyone wants the 100% certainty. And in order to get that, you really don't want to see like the bullish liquidity resting on that support. You at least kind of want to see it starting to like make some bounces. So just something to look at. But okay, guys, I think this is longer than 10 minutes. Definitely longer than 5 minutes again. I am gonna blame you. I apologize in advance, but when they ask, I am gonna say it's your fault. Um, and so that's all I have for you guys. Enjoy, happy trading, and I will see you guys next time. Bye. How do I turn this off?